On February 12th, 2026, Bloomberg got their hands on something they weren't supposed to see. A leaked memo, a classified document from inside the Kremlin, passed around between Russia's most powerful officials. And what's written inside that memo is about to change how you think about silver, about gold, about the dollar, and about your money. Here's what it said. Russia, the same country that spent 4 years screaming that the dollar is dying, that BRICS will build a new currency, that dollarization is the future. That same Russia is now quietly begging to come back to the US dollar, and they're not just asking nicely. They're offering America the biggest economic deal anyone has ever seen. $12 trillion, oil, gas, nuclear power, artificial intelligence, lithium, copper, platinum, and right in the middle of all of it, one simple request. Let us use your dollar again. Now, if you hold silver, if you hold gold, if you watched silver rocket to $121 and then crash all the way down to 64, this memo is the missing piece of the puzzle. It explains the 37% silver crash on January 30th. Hello everyone, and welcome back to the channel. Today, we're diving deep into a topic that's been making headlines and causing a lot of buzz, the so-called de-dollarization movement. You've probably heard the stories, especially about the BRICS nations, Brazil, Russia, India, China, and South Africa, leading the charge to ditch the US dollar. But what's really happening behind the scenes? Is the dollar's reign truly over? And more importantly, what does all this mean for your money and investments, particularly precious metals like gold and silver? Let's break it all down. For years, we've been told that the world is on the brink of a massive financial shift away from the US dollar. The narrative was powerful. The BRICS nations, representing a huge chunk of the global population and economy, were banding together to create a new financial order. They were tired of the dollar's dominance and the power it gives the United States. This story gained even more traction when sanctions were imposed on Russia, seemingly forcing them to find alternatives. Pundits and commentators were all over it, predicting the imminent collapse of the dollar and a glorious rise of a new multipolar currency system. But here's the twist. Recent data tells a completely different story, and it's a story you might not have heard from the mainstream de-dollarization cheerleaders. It turns out that Russia, the very country that was supposed to be leading this charge, is quietly but significantly moving back towards the US dollar. Yes, you heard that right. Let's look at the numbers. Reports from Russia's central bank show a surprising trend. The share of US dollars in Russia's export payments has been climbing. In September, it was around 24%. That's a huge jump from just a few months prior when it was in the low teens. So what happened? Didn't Russia pivot to the Chinese yuan? Well, they tried. For a while, the yuan did become a major currency for Russian trade. But businesses on the ground, the ones actually making the deals and moving the goods, ran into some serious problems. They found that dealing in yuan was clunky, inefficient, and often more expensive. Many international partners simply preferred the dollar. It's the world's most liquid and trusted currency for a reason. It's stable, easy to convert, and backed by the largest, most dynamic economy on the planet. So, Russian companies, driven by practical needs rather than political statements, started reverting to what works best, the good old greenback. This isn't just about Russia. The entire BRICS de-dollarization narrative is starting to look less like a coordinated revolution and more like a collection of wishful thinking and political posturing. Think about it. For a new currency to challenge the dollar, it needs a few key things. Deep, liquid financial markets, the trust of global investors, and a stable political system behind it. Does the BRICS bloc have this? Not really. The member countries have vastly different economic systems, political goals, and levels of development. India and China have their own strategic rivalries. Brazil and South Africa face unique internal challenges. The idea that they could all seamlessly agree on a single new currency to replace the dollar was always a bit of a fantasy. There's no unified BRICS currency on the horizon. Instead, what we're seeing is a modest increase in the use of local currencies for bilateral trade. India trading with the UAE in rupees and dirhams, for example. That's a natural development, but it's a far cry from dethroning the dollar as the world's primary reserve currency. The dollar still accounts for nearly 60% of global foreign exchange reserves and is used in almost 90% of all foreign exchange transactions. Those numbers aren't changing overnight. The de-dollarization story was a compelling one, but the facts on the ground just don't support the hype. Now, this brings us to an incredibly important question for investors. If the dollar isn't collapsing, what does that mean for precious metals like gold and silver? For a long time, one of the main arguments for buying gold and silver was as a hedge against a failing dollar. The logic was simple. If the dollar goes down, the value of tangible assets like precious metals will go up. So, if the de-dollarization narrative is falling apart, does that mean gold and silver are a bad investment? Absolutely not. In fact, the real case for gold and silver has nothing to do with these short-term geopolitical soap operas. The fundamental reasons to own precious metals are much deeper and more enduring. It's not about betting against the dollar. It's about hedging against the entire fiat currency system. Every government-issued currency in the world, including the US dollar, is a fiat currency. That means it's backed by nothing more than faith and a government decree. And historically, all fiat currencies eventually fail or are significantly devalued over time. This isn't a prediction, it's a historical fact. Governments have a constant temptation to print more money to pay for their spending, which inevitably leads to inflation and a loss of purchasing power for everyone holding that currency. Just look at the United States. The national debt is skyrocketing, currently sitting at over $34 trillion. That number is so large, it's hard to even comprehend, and it's growing at an alarming rate. To manage this debt, there are really only a few options: massive spending cuts, huge tax increases, or printing more money. Given the current political climate, which of those do you think is most likely? It's the printing press. This continuous creation of new money is a slow but certain erosion of the dollar's value. It might not be the dramatic collapse the de-dollarization crowd predicted, but it's a steady decline in your purchasing power. This is where gold and silver shine. They are the ultimate form of money because they can't be printed out of thin air. Their supply is limited by nature. For thousands of years across every civilization, they have been recognized as a store of value. They are a hedge not just against the dollar, but against the fiscal irresponsibility of governments everywhere. When you hold physical gold and silver, you are opting out of a system that is designed to devalue your savings over time. You are holding a real, tangible asset that has preserved wealth for millennia. Let's talk specifically about silver for a moment because it has a fascinating dual role. Like gold, it's a monetary metal and a store of value, but it's also a critical industrial metal. Silver is absolutely essential for modern technology. It's in your smartphone, your laptop, solar panels, and electric vehicles. Its unique properties of conductivity and reflectivity make it irreplaceable in many high-tech applications. As the world transitions towards green energy and more advanced electronics, the industrial demand for silver is set to explode. So you have this incredible situation with silver, a limited, finite supply on one hand, and soaring demand from both the investment and industrial sectors on the other. This is a classic recipe for a significant price increase in the long term. The short-term price might be volatile, bouncing around based on market speculation and paper trading, but the underlying fundamentals are incredibly strong. The demand is real and growing, while the supply is struggling to keep up. Don't be distracted by the day-to-day noise. Focus on the long-term picture. So, to wrap things up, don't fall for the simplistic narratives. The idea of a BRICS-led de-dollarization was an exciting story, but the reality is far more complex. Russia's return to the dollar shows just how entrenched the global financial system is. The dollar isn't going away anytime soon. However, that doesn't mean it's a perfect store of value. Far from it. The relentless money printing and soaring government debt mean that all fiat currencies, including the dollar, are losing purchasing power over time. The true safe haven, the real hedge against this systemic financial decay, has always been and continues to be physical gold and silver. Their value is not based on government promises or geopolitical trends, but on their intrinsic properties, their scarcity, and thousands of years of history as real money. So, while others are chasing headlines about de-dollarization, the smart money is quietly accumulating tangible assets that will preserve wealth for generations to come. Don't get caught up in the short-term hype. Understand the long-term fundamentals. Thank you so much for watching. I hope this gave you a clearer perspective on what's really happening in the global economy. If you found this video helpful, please hit that like button and be sure to subscribe so you don't miss our future deep dives. I'd love to hear your thoughts in the comments below. Until next time, stay informed and invest wisely.